Thank you for joining me today. Chris Hallam here, and today I'm going to show you how to shop for a mortgage the right way. No surprises, no hidden fees. We're going to cover the do's and don'ts and break down exactly what to focus on when it comes to a loan estimate. And then we'll go ahead and finish with some key questions that you must ask any lender before you go ahead and lock in.
Alrighty then.
So I've been in this business for 13 years and I've got a ton of experience navigating these shopping scenarios. I'm adept at being able to get you a better loan offer and streamline the transition. By the end of this video, you're going to know exactly how to compare loan estimates side by side and understand which numbers really matter and be able to walk into your loan closing with confidence. Let's dive in. First things first, it's good practice to get 2 to 3 loan estimates from different lenders. I always recommend getting at least one estimate from a true mortgage broker.
So you're telling me there's a chance?
According to a 2023 HMDA study, consumers save on average of $10,662 over the life of the loan when working with an independent mortgage broker versus a non-bank retail lender. Mortgage brokers pull from multiple wholesale options, giving you competitive pricing and often lower fees. And a quick tip, if you're not sure whether a lender is a broker, just Google their name plus mortgage broker or look for the term mortgage broker on their website. Big name retail lenders usually aren't brokers. Now, how do you know if what you received is a genuine loan estimate, not just a fee worksheet? So a fee worksheet typically has a disclaimer saying the following: your actual rate, payment, and cost could be higher. Get an official loan estimate before choosing a loan.
Surely you can't be serious.
I am serious, and don't call me Shirley.
That warning means that you should not commit, yet it's often phrased to make you think that it's final. A true loan estimate, or an LE, is a standardized, federally mandated form. Every lender's LE follows the same layout, so it's important to understand that. And so that's gonna make your side-by-side comparisons very, very easy. Page 1 is where most people spend all their time, and rightly so. Here's what to focus on. Number 1, interest rate. Compare the APR, but remember, 2 lenders quoting a 5.75% interest rate, an example, could still have different monthly payments. I'll explain more. Number 2, the monthly payment. Look at the breakdown. So here, you're gonna see principal and interest, P&I. You're also going to see mortgage insurance, MI, and then you'll also see taxes and insurance, which is your homeowner. So why payments differ even at the same rate? Most lenders estimate annual property taxes and homeowners insurance differently. If lender A uses higher estimates for taxes and insurance than lender B, you'll see a higher total monthly payment, even if the P&I is identical. Option A, provide each lender with your exact annual property taxes and homeowners insurance figures. That way, their escrow estimates will align. Option B is just to ignore taxes and insurance altogether. For option B, you're just gonna compare the principal and interest plus the mortgage insurance monthly payments. And a note on the mortgage insurance. If you're putting less than 20% down or using an FHA loan, mortgage insurance will apply. Different lenders can quote different mortgage insurance premiums, sometimes costing you the equivalent of an 1/8 or 1/4% in interest. So be sure to compare those monthly MI amounts carefully. Now, the other thing you want to focus on page 1 is escrow line items, which is your taxes and your homeowner's insurance. You want to see a yes in escrow on page 1, meaning that your lender collects and pays property taxes and insurance on your behalf. That way, you never have to write a separate check once you close. You're also gonna look for 5 no's along the right-hand side on the top of page 1. So no, this loan cannot increase loan amount after closing, it cannot increase interest rate after closing, cannot increase principal and interest payment after closing, and no prepayment penalty and no balloon payment. If any of those items read yes, just make sure to ask your lender why. That could be a signal of hidden fees or less favorable terms, or maybe you're in an adjustable rate mortgage. You're just gonna wanna make sure that you fully understand why any of those would say yes.
We came, we saw, we kicked its ass.
Reading page 2 of the loan estimate, So page 2 breaks down on your closing costs in sections A through J. And the bottom right corner shows you the estimated cash to close. And here's where to zero in. Section A, lender's fees. This is where the lender charges you to originate the loan. Common line items include origination charge, discount points, underwriting fee, processing fee. So your goal is to compare the total in section A from each lender. Now section J, as in Joe, is important because of lender credits. So not every loan is going to have lender credits. In fact, most loans probably won't have lender credits. But in section J, you could see lender credits that offset section A charges. For example, if section A is showing a total of $4,000 and you have a $2,000 lender credit in section J, your net cost from the lender is $2,000 in that. Now, if section A is a $4,000 charge, but the lender credit in section J is $6,000, that lender is essentially giving you a no-fee loan plus a $2,000 credit toward other closing costs. Now, sections C through H, title and third-party charges, these fees, appraisal, title search, recording, etc., are all set by title and escrow company, not the lender. So they should be roughly the same across lenders. Watch out if one lender quotes artificially low third-party cost, because those can jump later in underwriting. And if that happens, you're gonna get sticker shock when the final statement comes out and your closing disclosure arrives and you see that you have significantly higher funds due at closing. So here's a pro tip. Create a simple comparison worksheet for each loan estimate, listing the following: principal and interest and mortgage insurance payment, section A total fees, and then section J credits. That side-by-side view is gonna let you see exactly what each lender controls and where your real savings lie. If you throw the word compare in the comments, I'll go ahead and provide you with a free comparison worksheet to fill out.
As if.
Once you pick a lender, double check the estimated cash to close at the bottom of page 2. Ensure that your earnest money deposit is accounted for if you're under contract. To avoid any surprises, I recommend asking your loan officer the following question. Do you high side estimate third-party cost, prepaid taxes, and insurance? Very simple. You want to make sure that these fees that are estimated are going to be high-sided. You want them to be conservative estimates because it's better to see your cash to close come down during underwriting versus going up during underwriting. And remember, if they're not willing to overshoot those numbers, it could mean that you'll owe more cash at signing. So definitely make sure that they're conservative up front. Under promise, over deliver.
Boy, that escalated quickly.
The next question that you want to ask once you've decided on a lender is, when will you lock? Most buyers want to lock once they've committed, so ask each lender, if I'm ready to lock today, can you lock my rate? If not, why? So every business day that the market's open and you're unlocked, you're actually put at risk of rates moving up. They could move down, but if they do move up, that's going to obviously negatively impact your monthly payment. In 2025, technology allows any standard conventional FHA, VA, or jumbo loan to lock instantly. So if the lender hesitates, you might be better off with your second choice in lender.
Back to the future!
And then also, you want to ask this question. Mr. and Mrs. Lender, do you see any issues that could delay our closing? Every day counts when you're under contract. A late closing can cost your deposit or jeopardize your sale. Make sure that your lender has a proven process to meet deadlines and to be able to provide a clear status update. Finally, don't forget to ask this question. Do you see any potential pitfalls with my qualification? If there's an issue, job history, credit score dip, appraisal concerns, you need to know now, not 2 days before closing, right? So you want to make sure that bad news travels just as fast as good news. And then you can follow up with this question. What's your communication plan if something goes wrong? Bad news has to travel just as fast as good news. A proactive lender will alert you immediately if something changes so you can explore plan B before it's too late. Now, by covering these topics up front, you'll set clear expectations and avoid last-minute scrambles. To recap what we've gone over, number 1, get 2 to 3 loan estimates, including a mortgage broker. Number 2, verify it's a loan estimate, not a fee worksheet. On page 1, compare interest rate, principal and interest, and mortgage insurance, and ensure escrow is included, yes, for taxes and insurance. Check the 5 no's along the right side of page 1. No rate changes, no prepayment penalty, etc. On page 2, focus on Section A lender fees and Section J lender credits. Make sure you're alert for any artificially low third-party costs in sections C through 8. Confirm estimated cash to close is conservative and ask for high-sided estimates. Ask about rate locks. Can they lock today? If not, why? Verify their plan to meet your closing date and handle communication issues that arise. Now, you're well equipped to shop for a mortgage with efficiency and confidence.
How selfish of me. Let's do all the things that you want to do.
That's it for today. If you're under contract and ready to shop, type shop in the comments and I'll get you a no obligation, hassle-free quote in minutes. If you're already pre-approved but want a better deal, type approve below in the comments. And if you're thinking about buying sometime in the future, just not quite ready, type the word home in the comments and I'll send you a free guide with everything you need to know to be prepared when the time comes. Don't forget to like this video, subscribe to the channel, and hit the notification bell so you never miss a new mortgage process walkthrough. Check out my other videos for step-by-step tips on avoiding closing date delays, understanding your closing disclosure, and more. Thanks for watching.
You stay classy, San Diego.
See you next time.